Electricity tariffs in Singapore are going down for the first time since April last year. Utilities provider SP Group says this is due to lower energy costs compared with the previous quarter. But experts believe this decrease may be short-lived. Rates for the next 3 months will come down by an average of 1.4% compared to the previous quarter. That means households will pay 29.74 cents per kilowatt hour. The average monthly bill for families living in HDB 4-room flats will be trimmed by $1.55. Gas tariffs will go down by 0.36 cents per kilowatt hour to 22.73 cents. It comes on the back of lower fuel costs compared with the previous quarter. One analyst says the downward revision is due to more stable oil prices as energy markets reorganize themselves. But this may not be sustained moving forward.
This global reorganization is not yet complete. We have looming on the horizon in December the imposition of new embargoes on oil from Russia going into Europe. And this is obviously going to create some additional turmoil in the oil markets, and that most likely is going to turn into pressure on prices, and pressure typically means higher prices.
Well, other pressures include the strong seasonal growth in demand for natural gas during the winter. Experts say prices in the months ahead will depend on Singapore's long-term supply contracts and how resilient they are to excessive oil and gas prices. The analyst says tariff hikes are still possible given market uncertainty, but only to a point.
We can fairly reasonably assume that it won't get much worse than we saw, say, 6 months ago. And so whilst we may still see some upward revisions in the coming periods, we can probably reasonably assume they won't be in the same sort of double-digit percentage territories.